Thanks, Nirav. Good day, everyone, and thanks for joining us today for this call. From the management side, we are represented by Mr. Andar Aranaza Alvarez, the CEO, Mr. K. Jayaprakash, the CFO, Mr. Vikas Sinha, Senior Vice President Strategy, and Mr. Oroy Tilafon, Business Controller. Now, I would like to hand over the call to the management for their initial remarks. Over to you, sir.
Yeah, hi, this is Vikas. Good afternoon, everyone, and good morning to those who are joining from Europe. I welcome all of you on this call, as also Ander Aranadza, our CEO. As the second wave of the COVID pandemic rolls through our country, we are all in a somber mood, and we thank you for being with us in these trying times. I hope and wish that all your loved ones are taking care and are safe. Let us now start with MCI results for Q1 C21. We'll jump straight to page 7. MCI India results for Q1 C21 are on page 7. We can see that in this quarter, we have continued with the trend of sales and margin improvement from Q4 C20. Sales is 41% higher on a year-on-year basis compared to Q1 C20. We are also happy to report that in this quarter, we have not only exceeded the target of 15% EBITDA, but we have also improved on our Q4 C20 performance. The EBT is 1116 billion rupees in this quarter, and in percentage terms is above 10%. All our verticals are doing well, and the focus continues on improving efficiency and customer satisfaction. MCI Europe results for Q1 C21 are shown on page 8. The sales have steadily recovered. EBITDA is almost at 13.9%, which is higher by 3.4% compared to Q1 C20 and 2% higher than Q4 C20. Q1 C21 EBT is INR 922 million at 8.9%. We also have positive expectations for the second half of this year. And now if we go to page 9, we will see the consolidated results, which are a combination of the evolution in both India and Europe. MCI on a consolidated basis has achieved a sales in Q1 C21 of INR 20863 million, 30% higher compared to Q1 C20 and 12% higher than Q4 C20. We have delivered EBITDA of 14.7% and an EBT of 9.8%. In absolute terms, EBT on a consolidated basis for Q1 C21 is INR 2037 million or 203 crores. All of these numbers are a result of the work MCI management has done on reducing the break-even point and other improvement activities undertaken during the preceding year of 2020. On page 11, we have a special mention on the adjustments that we have done based on the tax amendments introduced in India via the Finance Act 2021, the budget of 2021. Goodwill of a business will not be considered as a depreciable asset, and depreciation on goodwill will not be allowed as deductible expenditure effective April 1st, 2020. In accordance with the requirements of Ind AS, we have recognized a one-time tax expense amounting to INR 1425 billion, 142.5 crores as the outcome of the difference between goodwill as per the books of accounts and its updated tax base. This deferred tax liability is not expected to be a cash outflow in the future, and its reversal is deemed unlikely as the value of its associated goodwill is expected to be in use. These changes will also not affect our tax rate going forward, as was explained in the last call. Our CFO JP is on the call, and any further clarifications, questions can always be put to him during the Q&A session. To reiterate, this is a one-time non-cash expense and is applicable to all companies who have been affected by the amendment. On page 13, we have tried to explain the short-term perspective of the possible effect the second wave of COVID will have in India. First, there is some potential pushback in demand, but from our experience of the first wave, we do expect volumes to recover before the end of the year. The demand is pushed back. Overall, rural demand is expected to be good on the back of normal monsoon predicted by both IMD and Skymet. On the supply side, there could be some loss of production in this quarter at OEMs and suppliers due to the micro lockdowns and other constraints like steel and manpower. Currently, all our plants are working full time. Of course, we are taking all safety precautions as mandated by authority. We are also providing support to our employees for testing and vaccination and in case they fall ill. Some of our employees have been affected by this disease and positivity rate in the workforce is in line with what the overall rate is in the city where the plant is located. But yet we are providing all help. Next, a word about dividends. MCI's dividend distribution policy was amended by the board. As per the amended policy, which is available publicly, the company would endeavor to maintain a total dividend payout ratio of up to 25% of the annual consolidated profits after tax of the company. We recognize that the company has not paid any dividends to the shareholders till date. We have been conserving cash to fund our organic as well as inorganic growth. However, we also recognize the need to pay regular dividends while continuing to grow the company, and the same shall be considered appropriately going forward. To end, we are focusing on the safety of our employees currently and on sustaining the effort, the great efforts that we have made over the last year. As mentioned earlier, based on our experience with the first wave of COVID, we are looking at the future with cautious optimism in spite of the fury of the disease, and believe things will only get better from here. Thank you very much, and now we can proceed to Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question, you may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question, you may press star and one. The first question is from the line of Jinesh Gandhi from Motilal Oswal Financial Services. Please go ahead.
Hi. First question on our European revenues. Can you indicate what was the European revenue growth in terms of euro basis?
Okay. Anders, can I request you to answer?
Yes. The growth in Europe in euro basis was 11% approximately. Okay, that's the growth we have in Europe. In the different verticals, we saw different behavior. CIE forgings, let's say passenger forgings, perform quite well, above 10%. Let's say much better than the market. The Mahindra forgings Europe, let's say the commercial vehicle forging, we had a growth of 2-3%. I mean, we were at the same level than in Q1 2020. And in Metal Castello, where we had the biggest growth in the gears division, we had a growth, I think it was something like 50% or 54%. Okay, so that's the off-road vehicle market that is now growing again mainly for the United States business. So that's the impact in Europe.
So this is quite outstanding growth, in fact, not just in Europe, but also in India. And we have grown ahead of industry in both the businesses. Can you throw some light on how much of, is this outperformance of the industry is driven by these new orders which we had been talking about along with export focus, or this is yet to start contributing to this top line so far?
So all the verticals, both in Europe and in India, performed really well in the first quarter. Okay, we see the export rate from India to Europe or to USA is approximately at the same level that we were before, approximately between 11 to 12%. That's the export rate. So that's export rate will grow in the near future, but we are still in the first quarter. We were at the usual rate, so no growth from that side. I think we were really affected in the first quarter in 2020 due to Bharat 6 transition, probably more than other competitors and more than the market. And now we are recuperating that growth. Also, we saw certain movement in certain verticals like magnets of gears, where we saw the movement or transition from Chinese suppliers to us, to Indian suppliers. So we see an important growth there. And globally, the last year new order book was higher than expected, and we are doing quite well on that side. So we expect important growth for the next future. Okay, so we are quite optimistic. We already told or expressed in my last call, we were talking about our optimistic view for the first quarter. You can see that this optimism is now a reality. And it's true that also for the future, we are quite optimistic, and I think that the second half of the year will be really, really strong in both regions. Perhaps the second quarter, due to the COVID impact, we could see certain slowdown, okay? Not yet, we have not seen yet in April, but probably in May, June, we could see certain slowdown due to the impact of the COVID in India and the semiconductor scarcity in Europe. But overall, I think we can have the really positive view for the future, and we are quite satisfied how we are managing the situation. And I think, and I would like to take the opportunity to give you some feedback that we received from our customers, and most of them, they are asking us to add capacity to be ready for the growth for the second half of the year. And we received certain congratulations from them because we managed properly the growth in these last two quarters. Okay, they had certain supply issues with other suppliers, and in our case, they gave us congratulations because of the fantastic job done by the team. So I think that the soundness of our company is clear, and we are well positioned in the market to continue growing.
Certainly. So just a clarification on the European business. Given that 1Q, the underlying market, particularly on the passenger vehicle, was quite weak because of COVID-related lockdowns. Do you expect the 1Q run rate of revenues for us to sustain despite semiconductor scarcity, or we will see some pressures there?
Okay, we already saw certain slowdown due to the semiconductor impact, but it's not relevant. I mean, we can say that we are approximately affected from 5% to 10% in the market. That is the global impact that we expect for the first half of the year. There is certain uncertainty, but some customers, they say that they will recuperate this lost demand or this lost production by the end of the year. Some others, they say that they will recuperate in 2022. But my view is that there can be certain slowdown now in this second quarter, and good recovery, and the order book is very solid for the end of the year. So I am optimistic on this side.
Got it, sir. Thanks. I'll come back and queue for more questions.
Yeah, thanks, Dinesh.
Thank you very much.
Thank you. The next question is from the line of Nikhil Kale from Axis Capital Limited. Please go ahead.
Yeah, thanks for taking the question. Yeah, congrats on a very good set of numbers. So just talking more about the top line performance. So generally talking, there was a significant outperformance versus the underlying industry production. So just wanted to understand, is there also an element of the commodity costs which have been increasing and you kind of pass through that to your customers? So if you could just maybe give some color on the realizations and how much of that impact would be there in the top line growth. And secondly, you mentioned that all your operations or all your plants are operating right now. But specifically in India, what is kind of the production levels right now? Also, specifically for Q2, what kind of impact do you see? We hear that the production schedules by some of the OEMs, especially on the two-wheeler sides, have also been lower for, say, May and June. So just some cover on that. Thank you.
Yes. Ander, on the second question, can I just take that, Ander?
Yes. I will answer the first question and you take the second, okay? So regarding the first question, the raw material increase impact in our turnover in the first quarter was approximately 4.5%, okay? So that's the impact of the raw material growth. It's mainly in the steel and aluminum cost increase that we, as you know, we pass through 100% to our customers. So that's the impact in India. Regarding Europe, in Europe we didn't have any raw material increase, or just minimum raw material increase in the first quarter, because the raw material increases generally are applied from 1st of April. So you will see that impact in the second quarter of the year. So because up to you in the second question.
Thanks, Ander. Your question was, are all our plants running? The answer is yes. As Ander explained, all our plants are running. Of course, we are taking care. As I said, the same level of illness that is there in a particular location is there in our plant. So we have to take all kinds of precautions. Second, what is the effect on schedule? Ander has explained this earlier. Currently in April, we are not seeing any effect on schedule. Of course, there will be issues around steel as oxygen supply is diverted and steel production may get affected. But right now, most steel companies have a certain inventory level, so that is not affecting at this point of time. Plus, a few OEMs have announced lockdowns in May. Hero announced between 24th April to 1st, Maruti between 1st to 9th, and now Hyundai has announced from 9th to 14th. But at the same time, please remember that the inventory in the light vehicle supply chain, in the car supply chain, if you look at the dealer association data, is very low, about 10 to 15 days in March. So it could be a combination of both, lockdown plus build-up of inventory. So we'll have to wait and watch how much effect it will have on May. It may certainly have some effect, but on the one hand, you will have lockdowns. Second, some steel issues. Steel issues could be there. Manpower availability issues could be there. But also on the other hand, OEMs will also try and build up inventory, especially on the light vehicle side. So based on this, we'll have to see. There will certainly be some impact. How much, we'll have to see. But right now, no impact so far in April. Nikhil, back to you.
Okay, so in terms of the schedules, you are not seeing any cut in the...
Till April. It's not to say it won't happen in May. As I said, we'll have to wait and see.
Okay, thank you. That's it from me.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Sunil Kothari from Unique Portfolio Management Service. Please go ahead.
Congratulations, Mr. Ander, Vikas and the team for such a wonderful performance.
Sunil, sorry to interrupt you. Your voice is breaking. May I request you to come in a better reception area, please?
Yeah. You are getting now?
Little better than before, yes.
Yeah. Sir, congratulations for
Sunil,
the way we have been.
Once again, you're still not audible clearly.
I'm sorry, I'll connect again. Sure.
Sure, sir. Thank you very much. Ladies and gentlemen, you may press star and 1 to ask the question. The next question is from the line of Raja Kumar V, an individual investor. Please go ahead.
Yeah, good afternoon, sir. Congratulations for the good set of numbers. So I have a couple of questions. This is on your European operation. So you have mentioned that you are expecting, there is a positive expectation for the second half of the year. If you could give more color to that. And also I want to know what is the update on your German forging operations? Because I understand those numbers are, kind of a drag on your, overall EBITDA numbers for the European operations. So if you could just give more color on that. And the second one is on the impact of electrification in automotive industry. How it is going to have an impact on CIE operations, the medium to long term, and what mitigations you guys are looking at. Thank you.
Okay. And the second half prospects in Europe and update on German forging, then we'll come to you.
Yes. Sorry, I didn't catch you, Vikas.
So there are three questions he has asked. First is, we have said that we are quite upbeat about the second half of this year in Europe. So he is asking, can you give us some more details on why you are so upbeat?
Yes.
Second, what is the update on German forging operations? Because they are a drag and have we improved there? And third, what is the impact of EVs on MCI? These are the three questions.
Okay, so regarding the first question about our European, our view of European market, what we see is that the second half of the year will be much stronger. That's the input that is giving us all the customers, mainly because the COVID impact. We are in Europe now in the what we call the fourth wave, and we are now, let's say, the COVID impact is being in a slowdown. So we are in a positive mood in this moment. The vaccination process is accelerating, and we expect that by summertime, by June, July, majority of European citizens will be vaccinated. Okay, so in that scenario, we expect that all the lockdowns and all the restrictions will disappear by June, July, September, in that range of the year. So from that point, there will be a peak in the demand and in the economical activity in Europe. Okay, so that is what the general information that we receive from our customers. So they are asking us to increase our stock levels and to be ready to increase the production. Okay, so that's in certain areas we are already feeling that increase. For example, in Metal Castello, as I explained you, we had this more than 50% of growth in the first quarter, and the demand is really, really strong. Okay, and we have our main customers are Americans, and they are pushing us a lot to increase our output. Okay, so we are working weekends, and we are now quite tight. Even today in April, because I was yesterday making the follow up of the business with the managing director. Okay, so the evolution is, in my opinion, it will be positive, and it will be really a strong end of the year. That's our view from Europe side. Regarding MFE, in Germany we had also a certain increase in the demand. So the commercial vehicles market seems that they are starting to grow again. I mean, we were in the last 1.5 years, we were in the low side of the cycle, in the bottom side of the cycle. Now we see that the market is ramping up, and this growth, together with the restructuring activities that we accomplished last year, gives us a quite positive situation. I mean, better than expected evolution, and despite the margins are not what we would like to be, the situation is improving, and we have the company under control. We don't expect any additional restructuring activities in 2021 because of the long and high demand and order book that we see for the next months. So the situation is stable, and we expect to keep the current evolution in the next quarters. Probably second quarter we will see a small decline, mainly because in Europe the impact of the COVID is not important, but also we have to add the semiconductor impact, so we will see perhaps certain decline, but the expectations are high. So that's the explanation about the European business. And finally, regarding the electrification, we are working a lot in the electrification area, because especially in Europe, because you know that probably the electrification will come first in Europe and then in other regions. In this moment, the battery electric vehicles market share is approximately 5% of the market in Europe, and we expect this market share to increase to 15% in 2025, and to between 30 to 40% of the market share in 2030. Okay, so in that sense, what we are now is working on changing the portfolio, focusing more in chassis components, in aluminum forgings. So we are making this transition to this, and we are quoting to customers with several projects, and we are working on that actively. Okay, regarding the short-term impact, we don't see any short-term impact. I mean, we don't see that the electric vehicle market will be they will have an important share in the next year, but we are preparing ourselves to be ready for this trend, that is a clear trend in the market. And I think that in Europe, our impact will be limited, and we will, of course, move our portfolio to other products as we are doing now. Okay. And regarding in India, this electrification, we think it will be much slower than in Europe. We think, and according to the experts that we contacted, they are talking about in the four-wheelers in India, probably in the 2030, there will be the market share of approximately 5%, and the impact will be more in the two-wheeler and three-wheeler area. Okay, so in that sense, in our portfolio, we have already a lot of components for the electric vehicles. We are already working for different car makers on that. And what in our opinion, or in my opinion, the impact for the next 5 to 6, 7 years of this trend will not affect at all in India to Mahindra CIE. And in Europe, yes, in Europe we will have the more impact, because the trend will be much more faster. But we are doing our job to move the portfolio to different products and different technologies also. Thank you very much.
Yeah. Thank you, sir. Just to add to that, sir, what we are also doing is we track electric vehicle orders separately internally. So we look at them very seriously. Of course, as Ander pointed out, we have an order book in India, which is small, but we are working. We are an important supplier to M&M electric vehicles. We are looking at some other EV companies, Bajaj, Hyundai, for orders. So we take it very seriously, and we monitor it very closely. But as Ander pointed out, the pace in India is slow. In Europe, yes, it will be much faster, but we are taking actions to mitigate that. And on the overall European thing, point that Ander just made, yes, we are looking at second half to be very good, but Q2 you might see some slowdown because of this whole semiconductor and other issues that are there in Europe at this point of time, based on what Ander said. Yeah, please go ahead. Sorry, I interrupted. Thanks for this detailed explanation. Sir, just one request, if you go forward, if you could also give some metrics between EV and non-EV, the sales numbers, it would be, I'm sure you will be tracking it internally, even for us, if you could give that, it will be helpful.
First, right now, EVs are a very small part of the portfolio. So if you are talking about an 8,000 crore company, it is not material. As far as the other question, I think what you mean is how much of our portfolio will potentially be affected by EVs. I think we have answered the question in the past that our share of powertrain and other related products on a consolidated basis is anywhere between 20 to 25%. So if you look at crankshafts, for example, they are an important powertrain product. So our powertrain products are somewhere, say, between 20 to 25% on a consolidated basis, a little higher in Europe, a little lower in India. And so that is what we supply to IC engine, IC engine parts. But as Ander pointed out, not all of it will be affected at one go. Of course, in Europe, the effect will be much faster, and we are mitigating it. I think in our year-end investor presentation, we had pointed out that we have a threefold strategy to make sure that our capacity utilization in our forging plants in Europe remains the same in spite of EVs. We are increasing share of business in crankshaft. We are focusing on non-powertrain products like metals. And Ander talked about aluminum forging even now. So that was the three-pronged strategy that we had mentioned. So as I said, yes, a strategy is in place. We are monitoring it. And yes, we know about 20 to 25% of our business is in powertrain. But all of it will not be affected at one go. And as and when required, we'll keep replacing it with other. We are a process company. It's not as if we are wedded to a product. We can, if required, we'll change our product portfolio in line with what the customer requires. Yeah, back to you.
Okay. Yeah, got it. Sir, just lastly, on the EBITDA number, 14% for Europe, is that a sustainable number or, it's a one-off for this quarter?
Ander, back to you. Is 14% Europe EBITDA number sustainable?
Yes. I think so. I think providing the market continues with this trend, we will be able to keep these margins. I mean, this is even our internal target we have our internal target to improve those figures even. Okay. So what we see is that we are now in the pre-COVID margins. I mean, in our original margins, and we expect that if the market continues growing, we will be able to improve those margins. So yes, I think they are sustainable, and that's our task to do it.
Okay. Thank you, sir. All the very best.
Thank you, sir.
Thank you.
Thank you. The next question is from the line of Nimesh Shah from MK Investment Managers. Please go ahead.
Yeah, thanks for this opportunity and congratulations on a very good set of numbers. Most of my questions have been answered. I just wanted to understand any update on the integration of our Brazil-China plants that we were thinking about earlier. Any update on that?
Yes. Ander, before Ander comes, Nimesh, we are currently focused on, last year was the COVID pandemic year in India. It is, again, this year is the second phase is there. So we are really focused on getting our house in order, making sure that we do better, and you are seeing that in the results. Some of the efforts that we made in Q2, Q3 of last year when there was a lockdown, that is reflected in the Q4 and Q1 results. So our focus is there. So right now, that's not our focus area, but yes, in terms of how to tackle that, I will hand it over to Ander.
Yes, this strategy that was fixed in Mahindra CIE and in CIE to transfer these forgings to the company is still there, and we, as Vikas explained, that due to the COVID and the evolution of the businesses and the different tasks we had in this difficult period, we did not accomplish it. But it is something that we are now reviewing in our strategic plan, that we are now starting with the preparation of the new strategic plan, and we will come back to you when we have this clear timing plan for these interventions.
Sure, that's all. Yeah. Just one last thing. So what will be the effective tax rate for us going forward? No?
We said that it won't affect in the last quarter also, in spite of everything. We had talked about the tax rate won't get affected, but I'll hand it over to KP. He will answer.
No, we should be around 26%, 27% global consolidated.
Okay, understood. Yeah, that's it from my side. Thank you.
Thank you. The next question is from the line of Vasudev Banerjee from Ambit Capital. Please go ahead.
Yeah, thanks. Congrats for good set of numbers. A few aspects. One, as you earlier mentioned, 450 basis points of raw mat inflation. So, should one look at it that's the part of the revenue growth also, that driving revenue reported by 450 basis points?
Vasudev, come back again. You're saying 4.5% in India is the raw material inflation, and the question is?
Will it be right to assume that that is also contributing part of your YOY revenue growth by the same quantum?
Yes.
Sure. Second thing, sir, as you highlighted on the EV aspect, just wanted to understand what percentage of AEL being a major supplier for plant being Bajaj, how much is exposed to engine transmission under AEL as of now?
AEL, look, as I said, overall in India we are roughly around 20% in India and maybe a little higher in Europe. So that is what it is, and AEL is in line with those estimates. The exact estimates we don't have, but I think AEL is in line with that. I think AEL makes crankcases. That's the one big engine part AEL makes. But other than that, I think maybe a bit, maybe some turbo housings also. So these may be the two parts. But then other than that, they are mostly in non-powertrain.
And can you highlight at current juncture what kind of EV component initiatives AEL is taking for future years? As you also highlighted that two-wheeler electrification will be faster.
Look, AEL is working closely with Bajaj on this issue. Bajaj has now plans. You know about their plans around e-Chetak and so on, which is a major model. So they are working closely with them at this point of time. So that's what AEL has been doing, and other verticals are also doing the same. Bilforge is also talking to some EV manufacturers, and as I said, we are suppliers to M&M EVs, to many of their good models that they have. So we have an EV order book. It's very small at this point of time, given the number of vehicles that are sold in India. But yes, we are looking at some of these, and maybe we'll also expand this thing.
So basically, if all these new big bang announcements, whichever coming on media by emerging e-two-wheeler players, so you are not participating in any of those supply chains as such as of now?
As I said, I'm like whatever I have talked about are those where we have an order book. That is not to say that we are not looking at other things. So whatever I have told you are where we are dealing with. Okay. So as I said, yes, we will look at the two-wheeler transition very, very carefully, and yes, we will try and participate in whatever new players come up.
And last,
we will make an effort. We'll make an effort towards that. Whether it happens or not, of course.
That's it. And last question, sir, as the initial comments as you highlighted, because of the change in union budget this time, that you cannot take the tax benefit because of amortization. Down the line, will it be possible any scene of any write-off of intangibles as such from current size of the
write-off of goodwill?
Goodwill write-off any requirement in next 4 to 6 quarters because of this change?
No, we don't see any such write-off required.
Okay. That's great. Thanks.
Business are doing well, and we don't see any need for it.
Thank you. Participants, you may press star and one to ask a question. The next question is from the line of Jay Daniel from Entropy Capital Advisors. Please go ahead.
Yeah, sir. Earlier you had mentioned that your break-even point for Europe was around 5.5 billion rupees, and for India it was around 3.5. For India, it kind of went up because of the sudden surge in demand in the second half of last year. So, what is the current break-even point for Europe and India, and the gross margins or the contribution margin in both these geographies?
BP, you look at gross margin contribution and BP in India and Europe.
Yes, here the break-even in Europe as of now is 5 billion rupees of sales, and in India 3 billion rupees. So we can see that the global picture is a sales level of 8 billion rupees per quarter.
Yeah, I couldn't hear that properly. I mean, if it could, there was some.
Yes, that's right. The current break-even point is 8 billion rupees for full Mahindra CIE, and the split is more or less 5 billion rupees in Europe and 3 billion rupees in India.
Okay.
Thanks.
And contribution margin?
No, contribution margin is dependent on how you look at it. The variable cost, how you define variable cost, whether labor costs are variable or not. So I think it will not be comparable. So I think let's stick with the break-even point at this point of time, because contribution, depends on how you, some of the labor cost is variable, some is not. In Europe we treat variable cost and labor cost differently than in India and so on. So let's, that's
how does the company define it? I mean, it's as per your calculations. JP or Royce, can you explain? What is how do we define contribution margin?
For the contribution margin, usually we consider all variable costs, such as all the consumables, raw material, energy, and also all the part of labor cost which is variable, so which is totally linked to production. This means direct labor and indirect labor. Okay, and our contribution margin, it depends on vertical to vertical, but could be at around 20%.
Which are around 20%.
25%.
No, but please remember, as Roy pointed out, direct labor is considered as part of variable.
Yes, I understood that. So 20-25% for the company as a whole.
Yeah.
Okay. Yes. Now, fine. And you're at the moment an 8,000 crore company. Internally, when do you see you doubling sales? Getting to become a 16,000 crore company, considering the outside dynamics that are in place as of today.
As Andrew pointed out, we are rethinking our strategic plan. Let us go through that, because that's a very, it's a very long-term question. So let's look at that separately. Let's go through our strategic exercise and then.
Okay. But you would essentially be looking at least a 15% compounding over the years.
As I said, let's look at that separately. Let's not put any numbers at this.
So your German operation has always been a pain point, and kind of dragged down the performance of the company as a whole. Would you at any time look at closing down your German operation? And would pension liabilities be a reason for continuing with the German operation?
I'll of course ask Ender to talk about this, but it's not as if the German operations are loss-making. On a net profit basis, you may leave out last year, which was a special year, as we all know, but they are not negative PBT or of that kind. So yes, they are lower than other verticals in our business. They are not up to our CIE internal standards for sure, but they are not negative. Let me just clarify. That is number one. Number two, we do think that we can make improvements in that business, and that's the reason why they are there. So it's not about whether pension liabilities or not. Yes, pension liabilities are what they are. It is a rule that is specific to Germany, and of course, all of us have to follow that. So I think the reason why it's not there, it's an important part of our portfolio. It provides us diversification in terms of being present in the truck market in Europe. So it's a significant diversification level. Of course, some of the OEMs that we work with are big names. We have worked with almost all the major truck OEMs in Europe. So we do think it's an important part of our portfolio. Yes, it is not up to the mark. But now I'll turn it over to Anders for his views.
Sorry, I was in the mute. We are not planning to close the activity in Germany. Okay? Our strategy is to continue improving the efficiency of the activity, and what we are doing now is to make this downsizing of the business, eliminating the loss-making components and keeping only the best margin products. Okay, so we have been doing this restructuring in the last years, especially last year due to the COVID. We had to speed up a little bit the restructuring, and we did it. And now we are in a positive break-even position. So the view for the future will depend on how we continue improving the margins and the business. If we are not able to improve, or we see a worsening of the situation, we will have different measures, and we will decide later. Okay, but now on, in each moment, what we are doing is we are focusing on the improvement in the company, and as you can see, we are able to get at least reasonable figures, and that's our aim for the near future. For the long term, we will decide according to the evolution of the market and evolution of our company.
Okay. Thanks a lot, sir.
Yes, thank you, sir.
Okay,
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Gautami Desai from Chanakya Capital Services. Please go ahead.
Yeah. Hi, Anders. You being born and brought up and also working in Europe, I thought it would be more relevant to answer this question. That even before.
Sorry to interrupt you, Gautami. May I request you to speak a little louder, please?
Okay. Yeah, I would like to ask this question to Ander, being a native of Europe. Ander, even before COVID, we were talking of slowdown in Europe because of various reasons, like could be EV or could be shared mobility, or it's just that there's no growth happening there. So leave alone the COVID part, but after and we've been 2 years after that, after we started witnessing the slowdown and accepting the slowdown, and 2 years after that, so now do you think that I'm not talking about this research after COVID, but are there any behavioral changes in the auto industry among the consumers in Europe which could make us revisit our or probably that has caused you to increase your optimism on Europe?
Okay, what we see in Europe is that this COVID pandemic has reduced and kept the people at home and reduced the expenditures in different areas, not only in the expenditure in the cars, but also in other sectors like hotels or travels and so on. So I think once the virus is gone, that we expect that we will start living normally again after summer. That's our expectation, and that's what everybody is now talking especially in Europe. I mean, because we are all at the same pace of vaccination. So from that point of view, we will see a recovery of the market and the expenditure and the economic activity in all the regions. That's what we see. So we will come back to a normality. It's true that with the EV transition and the new trends, there is a little bit of uncertainty in the buyers. So the market is expected to grow slowly in the next years, mainly because of this uncertainty and this change of trends. But I think that also we need to consider that after this big crisis, there will be a consolidation in the market. Okay, so the best performers will continue, will take and will consolidate the business, and some of the weaker players in the market will disappear. Okay, we are already seeing this. Okay, we feel this, and that's why we are quite optimistic, because we feel that we will be one of the survivors and the winners in this consolidation process. So that's the reason of our positive view, and that's also one of the reasons of why our Q1 was so strong in India, also because we performed well, we performed better than competitors in certain areas. We were able to deliver the customers, we keep our customers satisfied with our delivery rates, with our efforts. All the factories were running, let's say, 24 hours a day during Saturday, Sundays to fulfill the demand. So that's the key point from our side. We will continue improving efficiencies, we will continue improving our competitivity and our service to the customers. So those are the parameters why we consider that we will be in the market even stronger in the next future. Okay, so that's the view. All these new trends that are coming, like the electrification, the shared mobility, all these activities will come, but we think that we will continue being one of the preferred suppliers for our customers. So we expect to continue growing in the near future. Yeah.
Great answer, Ander. Thank you so much.
Yes, thank you very much. Thank you.
Thank you. The next question is from the line of Bharat Seth from Quest Investment Advisors. Please go ahead.
Hi, congratulations, Ander and team. On good performance. See, Ander, earlier we were talking of with BS in India, BS6 coming, our content per vehicle increasing. That is one. And second thing, now we are seeing that consolidation is happening and we are winning more. So first, both are the separate questions. So while we are winning market share because so do you think this is a permanent, market share gain? Those who have lost will not be able to come back, or once the COVID will be, post-COVID thing will normalize? And third, how do even Europe also on the CV side we were gaining, some market share. So if you can elaborate on that.
Mm-hmm. Okay. Yes, regarding the consolidation in the market, yes, what we think that this consolidation will continue, especially when the situation is complex, like in this moment in India. Let's say the best prepared companies with the best procedures, with the safety procedures for the workers, as we have, let's say, with massive tests done to all our workers. Let's say that all the companies that are well managed will continue because they will continue supplying to the customers. Okay. In my interactions with the customers, they told us that in 2020, let's say in the second half of the 2020 calendar year, they lost production because lack of supply. Okay, so the market could have been much better than it was. Okay, and the main reason was that the suppliers were not ready to supply with the required volumes. And in this sense, we see that they are coming to us and they are pushing us to continue producing more and more because some other small businesses, they cannot manage this situation, the complexity of the current situation. Okay, so even for us that we buy a lot of small components to small suppliers, we had to add our capacity in-house because our suppliers were not able to deliver the required parts. Okay, so this is just an example of why the good with the well-managed companies can continue and will continue growing and consolidating the business. And this is, I think, the trend that we will see in India in the future, where the professional companies will continue strengthening his position, and the less professional some of them will disappear or will be added to other groups. Okay, so that's my feeling. And regarding the German and the commercial vehicle trend in Europe, what we see now, and because we are receiving the forecast from the customers with 6 months of advance, mainly because of the lack of the difficulty to get the steel some months ago. So now they give us much more visibility on the future. So we see till October, November the order book, and it's really healthy. So perhaps in the short term we could have some reduction because you know that the order books are changing every week, but the visibility that we have is really strong. So what we think, we are not gaining market share on this business. What we see is that we are growing together with the market. Okay? Our main customer is Daimler, the Daimler in the truck division of Daimler, and they are doing really well in the last months, and they expect to do it strongly in the next quarters. And we have the long-term or at least mid-term visibility with a strong demand. So that's why my view is quite optimistic on this market.
Okay, and with BS6 in India, I mean content per vehicle, increase in content per vehicle.
Okay, perhaps because you can elaborate on that.
Yeah, Bharat bhai, it was in certain specific areas. For example, in gears, very clearly, the gears for BS6 is much more complex. So there, we had gains. There were a few on the engine component side, some engine parts. But by and large, for example, BS6 had no effect on things like stampings or composites. So yes, in specific, even in casting. So the casting, forging, gears, maybe, we had some effect in forge. But other than that, it's okay. As I said, in those areas, we gain from BS.
Okay. And now on the last question, on the capex side, since Ender stated that customers are pushing, to supply more and more, and last year we did not invested much. So how much capex that this year we are planning?
Okay, we are planning usually between 5 to 6% of the turnover in the capex. This is our standard capex. Okay, in 2019 we invested 4.1 billion rupees, and this year we expect to be there or even more. Okay, depending on the customer requirements, probably, and that's also important to say that we are investing importantly in the first quarter. We invested I think it was about 1 billion rupees, and we are at the pace of 4 billion per year, and probably in the second half of the year we will increase this rate because of the new orders that we are getting, and also as I mentioned and you will correctly said, the customers are pushing us to increase capacities. So yes, we are planning that. We are doing our review of the capex plan for the next months, but we are in this line of 5 to 6%, and in certain verticals could be a little bit more.
And then when we say that there is a consolidation in India, so how many new customers have we won, or with existing customer, new components or that development, if you can highlight?
Yes, in last year we explained that we got approximately was something like 25 customers and new products. And regarding the consolidation, the consolidation means that we are producing certain components now that were produced by others, mainly the same kind of products that we are doing right now for different platforms, of different cars, different tractors. This is what we are consolidating. So that's the view. I don't know, perhaps because you can elaborate a little bit more detail.
Yeah. So 1920, as Anders pointed out, about 25 new customers were added between 2019 and 2020, spread across verticals. But more importantly, if you remember, if you go through the transcript of our Q2 C20 call, where we had talked about, how given the dynamic situation that prevailed at that point of time, similar situation prevails now. I think we had said OEMs will put more faith in companies that have stability in their business model, and that exactly as what has happened. And therefore, to your question, whether they will go back, well, the answer is, as Anders pointed out at the very beginning, that he has received a lot of congratulatory messages from many OEMs for supporting them during the second half of last year. So that that is something we strive to do. We strive to win the confidence of our customers. And as pointed out there, that last year around the same time, the same thing prevails. The situation is dynamic. It is not easy. So suppliers which will manage cash, to manage safety, quality, they will continue to do well. And even in categories which are existing product categories. So yes, 25 new customers. Both in existing and new product and new products. As I said, we are not a product company. So more than saying we added this new product, we actually do what the customers ask us to do. So I think adding customers and winning the favor of existing customers, both of them are equally important, and we have done that. As you know, especially on the tractor side, the growth was immense. So we have supported our customers there. So we hope to keep winning this, the confidence of our customers.
And in this first quarter, because of now was sales growing substantially higher, so whatever efficiency side we took the measure is reflected in the margin. So still there is a room for improvement in margin with higher business.
Yes. Ander is here. He will never say no to that.
Yes. Okay.
As people reporting to him, we may want to say no, but he will not allow us to say that.
Yes. No, that's
no. So realistically, how much margin we expect? If 21 and 22.
Yes. Okay.
No, let us not make forward-looking statements, Bharat, but yes, we do expect to improve us. Yeah. Yes. To answer your question directly there.
Okay.
Yes, okay. But just as reference, and we already told in other calls before, previous years, that CIE margins globally is approximately at 17 to 18% EBITDA. Okay, so our target, our aim, and the CEO of CIE is pushing me to get those margins also in our Indian business. Okay, that would be the long-term strategy to be there. I think that is possible. Of course, we need volumes and we need to continue our efficiency improvement. Of course, we have a lot of room for improvement, and we are doing it slowly, but step by step we are getting this. You can see in the results in the last quarters that we have accomplished these improvements, and we see already in our P&L, and approximately we can say that we had an internal efficiency improvement of 20% approximately in the last year, and we still think that we have the opportunity to continue with the automation processes and also the what we call Industry 4.0. I mean, with the new management strategies, I think we can continue improving our factories. Okay, so yes, this is my task, improving the margins, and I hope that we will see better margins in the future. Okay.
Okay. Thank you very much. All the best, Ander and team. I mean, and Vikas. I mean, wish you all the best. I mean, look forward for a CIE kind of margin by 23.
Thank you, sir. Thank you very much.
Thank you.
Yes.
Thank you. The next question is from the line of Nishan Vas from ICICI Securities. Please go ahead.
Yeah, hi. Thank you. Thank you for the opportunity. So I had a couple of questions. Andrew, you mentioned about the export strategy. So could you shed some more light in terms of how is the strategy playing out between external customers and also sourcing from CIE, increased sourcing from CIE? And the second question is on Bilforge Mexico. Can you share some update on that? Where's the progress?
Mm-hmm. Yeah. Okay. Yes. Regarding the export strategy, we had this growth strategy. We are now at approximately 12%, as I said before, and we expect to grow this rate to 20%. Okay, that's our target in the next years. We have already been awarded for several export projects, so we are industrializing, we are investing, and we are launching those products, and some of them go directly to our customers in Europe or in the States, but also we are going to produce, for example, forgings or gears from India to our companies in CIE in Europe to be finished and delivered to the customers. Okay, so this process is also there, and we have big businesses to be produced in India, so we are taking care of this process. Okay, and this strategy is still there. And the second question was
Bilforge Mexico.
Okay, the Mexican point. Yeah, and Mexico is you know that we 2 or 3 years ago we had certain difficulties to launch the activity, and we have it was slower and the slower pace than what we wanted, but now the company is performing really well. I mean, the team has been fully trained. We have reinforced the team, and the plant is producing perfectly with the proper quality, and the customers are really satisfied. We got a new customer, and we got new businesses from our customers. And in fact, we are now adding capacity because we are launching new products to start from September, October, and ongoing. Okay, so the evolution of the company is positive, and we have good expectations in Mexico in the near future. We are adding this new press, investing. We need to expand the building, so the business is doing really well.
And thanks for that. And if you could put some data point around where is Mexico's revenue structure today, and would you believe the profitability has reached where you were expecting it to reach? And in terms of your investment size in Bilforge Mexico, could you shed some light in terms of what kind of expansion you are thinking?
Yeah. Okay. We are expanding the building because we are adding a new transfer press in the next. We will receive it in summertime, so everything is ordered, so we will receive the machine. We are talking about an investment of approximately 4 million euros that we will accomplish in the short term in Mexico, and the evolution of the company is really good. Regarding the margins, we are not yet where we expect to be, but we are already in the break-even situation, and in the future we will have the same or even better margins than we have in our forgings in Europe and in India. Okay, so that's the situation of the company.
Thanks. One last question, if I can squeeze in, is obviously you've answered many questions on MSC, and congratulations on MSC improvement after including the restructuring and the market evolution. If I put it in context over, say, a 5-year period since CIE took over this entity, where initially long-term targets were at double-digit margin, if I had to, with the restructuring behind you and with market evolution looking positive, where do you see the medium-term margins kind of stabilizing for MSC?
Okay. Yes, this double-digit margin that we still have in mind, and as our internal target, proves difficult to obtain, at least in the last years, and we have mainly because of the reduction of the volumes. And in this moment, we are not yet on those figures, but we are much better than a couple of years ago. Okay, so we were able to improve slightly the situation, and what we see this year, this business will be at 170 million euros, 180 million euros turnover, in that range. That's the trend that we have in this moment, and probably in the future it will be a business of 150 million euros. That can be the size of this business in the future. Okay, so we accomplished the reduction, and in a more efficient way, if we are able to reach close to this double-digit EBITDA, that would be the target in the future.
All right. Thank you, and best of luck.
Thank you.
Thank you. The next question is from the line of Nikhil Kale from Axis Capital Limited. Please go ahead.
Yeah, thanks for the opportunity to ask a follow-up question. So this is more from a long-term and a strategic perspective. So you mentioned that we are a process company first at heart, right? So going forward, how is Mahindra CIE and maybe even CIE Automotive, the parent, looking at maybe diversifying out of automotive into some of the other industrial segments, right? So, for example, Bharat Forge has done it in a pretty successful way. So how is the view towards diversifying into non-automotive, or say, or more industrial-oriented segments?
So we continue thinking that we are an automotive company with our knowledge and our main expertise is based on automotive, and we think that we will continue working only for automotive. Okay, so automotive is our main business, and we will stick to this strategy. We are not thinking on diversifying on other activities. Thank you.
Okay, thank you.
Thank you. The next question is from the line of Jay Daniel from Entropy Capital Advisors. Please go ahead.
Yes, sir. Last year, CIE increased its stake in Mahindra CIE. Would it look at increasing its stake by a similar magnitude in the current year also?
Okay. This is a shareholder matter, but the CIE's commitment to this project is really strong, and we continue thinking that the bet of CIE in India will continue growing in the future. So I cannot answer you with a figure or answer, but I can say you that it is highly probable to continue growing this bet and this share.
Okay. Okay. Thank you, sir. Thank you.
Thank you.
Thank you very much.
Thanks. Yes.
Ladies and gentlemen, that was the last question for today. I will now hand the conference over to the management for closing comments.
Okay.
What do you answer?
Yes, perhaps you can also make a comment, but just some words from my side. So thank you for your questions and interest showing our company, and really clever and well-directed questions. Thank you for that. Okay. I hope we answered correctly and you perceive the strength and solidity of our company, and we continue our drive towards efficiency, competitivity, and profitability. Despite of the peak of the pandemic, we will continue being optimistic for the near future. And let me share with you that most of our customers acknowledge our good performance and efforts to deliver with quality and on time. And I have received the recognition personally, and I feel immensely proud for the team that did all this job. So thank you to the team for this fantastic job. And my last words go to all the people that is suffering due to the second wave of the virus in India, and my fully support and best wishes to all of them. Okay. And finally, thank you for your trust in our company, and take care. Thank you. Goodbye.
Thank you, folks. Have a good day.